We're just going to briefly go through two open plays. One is going to be the open test drive. So I'm just going to do open test drive, and the second will be the open drive. And we're going to go through the two of them. I'm going to show you what they look like and what the implications thereafter of those two opens. And then we're going to talk a little bit about a market positioning unwind or a breakout trade. So straight into it. Very simple. The open test drive, okay, if you want to take a little picture of this or a graphic or copy along, the open test drive is simply where the market opens. It then tests in one direction. It tests out other time frame participants. Once it's done the test or taken out some stops or effectively run into some other time frame participants, we see a very quick rejection and reversal called an open test drive. So it tests a key little reference point. Now that reference point can be a number of things. One, like I said, it could be maybe a weekly high. It could be a point where we get some stops. It could be, as the example I'm going to show you, it could even be a triple top TPO like we spoke about this morning, or a TPO ledge. Okay, so that's our first type of open, which is the open test drive. Now, a stronger open than that is what we call an open drive. So not an open test drive, but simply an open drive where the market opens and straight away bids up and trends in that direction. So there's no test lower. We do tend to see in this instance that the market opens obviously around the low or the high, and that tends to be the extreme point for the day. Now that opening price tends to be an extremely important reference point over the course of the day, and it does tend to have stops or short-term positioning behind it. So that's the key to pay attention to with regards to both the open test drive and the open drive. Now obviously, to bear in mind, I've obviously drawn these charts in the direction of up. It just happens to be I chose that way. It could very easily be the other way around. So we could see a market open, test lower, and aggressively reverse in the opposite direction. Or equally, we can open at the top and reverse straight line down. Okay, so that's our open trades that we're going to talk about as I go through obviously the German Bund and the Euro Stoxx 50. And then second is a breakout trade. Now, in profiling terms, to learn a breakout trade is a wonderful thing to have the profile for, and I'm going to show you why, because there's a number of visual characteristics you'll learn to identify when we get a breakout. So it's no secret we're talking about obviously the E-mini S&Ps and talking about that 24.43.5 area. Why? Because it is a double top on the daily charts. We rejected there twice, and we spoke about that being a significant point simply because double top is a technical pattern, so we're likely to see some positioning behind that. So we were looking for a potential breakout once we took up the 24.43.5 area. Now, the key to a breakout, and the most important thing to a breakout, is to watch the price response once we break. So let's draw this and let's pretend this is our 24.43 double top. Okay, so the market arrives at this point. Now, as a general rule of thumb, something I've found in my career is that the best breakouts occur not when they approach the point, so not when they do something like this. They don't necessarily approach the point and just go straight through. Okay. Yes, those tend to have stops, but they're not necessarily the best breakouts with continuation. For me, the best breakout trades come where the market almost consolidates and sits below the break point and then goes. So it's almost like it's an elastic where it builds a bit of energy, builds a bit of accumulation, maybe even entertains a couple of shorts, and then we get the real move before the 24.43. So that's the first trick and identifier you want to learn when learning to trade breakouts. The second is once the break occurs, we want to see volume plus volatility. Okay, so you want to see a shift in the velocity and price movement. Okay, you want to see a real break and go once we take out the key level, and you also want to see the volume pick up. Why? Because by nature, once we take out a certain price, we should see anyone who's short stopping out and buying out, anyone that wants to get long buying into it, and equally a continuation of whomever was buying it in the first place continuously buying it. So we can see by the very nature of trading above that price, we bring in a whole bunch of other participants, which brings in the business and the volume. So those are the two key characteristics: structure before the break, and then obviously volume and volatility. The third and most crucial one is, again, something I tweeted, and this is where the profile becomes wonderful, is you always want to see what we call an LVA, or a low volume area, or an untraded area. Now I'm going to show you what that looks like on the profile as well as the footprint, and we're going to go through it together. Okay, so that's our little pattern plays. Let's get onto the charts and see what this all looks like. So first what we're going to talk about is the German Bund. Let's go through those two opens. Obviously we spoke firstly about the open, the open test drive. Now we can see if we go to that Bund and we just open it up, we can see that, the K print opened in and around the 75s. It then tested, so it tested above the Friday high at 76 as the triple top TPO bad high. We tested above it, took a few stops, but ultimately very quickly got reversed. Now, the important thing to understand about an open drive is, one, you need to see speed. So I'm just going to bring up a very short-term time frame so I can show you what that speed looks like. So if we were to just go to a 1 minute chart in the German Bunds, we can see once we triggered that break, this is a 1 minute chart, so once we triggered that break above the Friday high of the 76s, we very quickly pivoted straight back to it, but then also continued in the opposite direction. Okay, now the key to an open test drive is that once the cash market comes in, it should go in the direction of the open test drive. So we can see once the 8 o'clock came in, the market then continued in the direction. Okay, now very typically you wouldn't see the market easily auctioning back against the flow, and we can see that the market for a good almost hour and a half, the Bund was respecting this principle. Okay, we could see it was making a series of lower lows and lower highs, and and it took a good hour and a half for it then ultimately to break above that previous high, and ultimately then the trade opportunity was gone. So let's just go back to the profile and look how that played out. Now, remember what I said, when you get an open test drive, there's a high probability that we continue to see rotations in the direction of the drive. So we saw the K print drive back down, the L print continued, the M print continued, the N print, P print remained within the M print. Okay, in order for this to have been a successful strategy or continuation, we needed to see a break below those 61s on the P print. Had that occurred, again we would have been looking for short side continuation to target that naked VPOC at 164.28. Okay, the fact that it didn't, the fact that it broke to the upside, then nullifies that trade hypothesis, and ultimately we then move on and try and find something else to do. Okay, so let's then go and have a look at a second trade strategy or second open type, which is more aggressive than the open test drive, and that is effectively the open drive. Okay, now again we've got the Euro Stoxx 50. Note where we open. We open on the absolute low 47s. The market opens and drives straight away higher up to the 66s. We then get a very, very shallow pullback before the cash comes in and continues in the direction of the test. Okay, so this is very, very typical of an open test. Once the cash comes in, it confirms the drive and we continue in the direction of the drive. Okay, so the difference between an open test drive and an open drive, very simple. The open drive doesn't have a test in the opposite direction and it's a lot more aggressive in nature, whereas the open test drive, again, still aggressive, but not as aggressive, but ultimately still continues in that direction. So they're both very much bias type opens, and that's the key to understanding the open, is when you see either an open test drive or an open drive, you want to be transacting within the direction of the drive. So again, like I always say, it's knowing an open drive, they don't occur very often. If I was to put a statistic on it, you're looking at maybe once or twice a month you're going to get an open drive or an open test drive in a market. Okay, but the fact is, once you see it, you just want to make sure you don't go and counter to it. So even if you're not someone that uses the profile as a tool, as most of us do at Axia, make sure that if you do employ this tool, that you're aware of the things to do and the things not to do. In this case, when you see an open drive or an open test drive, you don't want to be going counter to a very strong sort of fundamental principle that we see with the market profile tool. Okay, so that's the two open drives.